Welcome to the channel, Paramay Trades. This is Paramay's Trade Journal. We're going to take a quick break today from, well, not a break from the charts, but a break from trade setups to work with price channels, just setups and tips. So the purpose of this video would just be to look at your manual price channels and your regression price channels. How to find them, how to set them up, how to use them, how to work with them. Adjust the coefficients to hopefully find yourself some trading opportunities or keep you on the right side of the trade. And how we're going to do that is we're going to look at the dollar index. We'll look at the dollar index and just see if we can do a number of things here, right? First and foremost, I want to give credit to the literature of Laurentiu Damir, which I think is Romanian and Russian. Is it a Russian last name and a Romanian first name? I don't know. Actually, he has a wonderful book, Price Action Breakdown. It's been pivotal in some of my charting studies, but we're going to see if we can use the thinkOrSwim platform here to set up our trade channels, our price channels, to see where price action is and where the activity is going, and maybe project, or determine the beginning and the end of trends. How we can identify good valued areas, high valued areas, or low valued areas. What most call a point of control, and let's dig into it. Let's dig into it. So we've got to get our price channels set up, right? How do we identify them? How do we find them? And I would say probably one of the things that I do first is look for some violence. And that is, probably one of the top two things that I do when I try to find a price channel early to see if I want to get into a trade or get out of a trade. So just we're scrolling back here quite a ways on. I think we've got our 1 hour chart loaded up here, and we're trying to find where we could find some price channels that make sense, that could get us into a trade, that maybe identify that hey, this thing's turning around, maybe we want to get involved. Let's do one thing though first. Let's just turn off the EMA so this can be a little cleaner here. As an intraday trader, I'm a big fan of the 15-minute time frame, but they don't always work out because you can't get enough information on the screen. So, finding price channels. So let's dig into it. This is back in December. These were some nice candles here, right? These are some nice indications that bears might have overstepped their bounds a little bit, and buyers were really interested in this area. So this is a very notable price area to work with just based off these two candles. So we've got these two candles working for us, and now can we identify some kind of channel that might work with us or work for us? So the second thing I like to do is, so we identify some violence. The second thing I want to do is find at least 3 pivots to work with to see if they can help. See if they can assist. So we just bring up our normal, not our normal, but our manual price channel. So we've got these 2 pivots here. Pivot low, you got your pivot high, and we pivot low again. We kind of get like a higher low type activity going on. So these are the three key pivots that I want to work with because I want to find an early price channel to identify. So here's our three key points, our 3 key pivots that we can work with. And this follows some kind of violence. So this follows a great deal of violence. So bears are getting really aggressive in this territory. Extremely aggressive. So much so that they pushed into an area of demand that that buyers were waiting to hop on. So this is our first indication that something's going on in the market here with this aggressive move, and then we get another aggressive move again by the bears to the downside, and they push lower than this. So we've got a number of things working in our favor as well. Is that we have the potential for, let's do circles here. And this is a technique I picked up from Larry Williams. Is we would love to find a swing pivot that works in our favor. Now, granted, this is, a higher low in the context of this move, a higher low, a lower low, and then another higher low on the opposite side to qualify for a nice swing pivot working in our favor. So looking at this, so how do we get this channel, or how is this channel set up? Our zero coefficient is lined up. The first 2 points. So we don't, with regards to channels, I don't like to pick higher highs as the zero coefficient. I like to do lower highs for the zero coefficient. Whoop. And I like to do higher lows as the zero coefficient. So sometimes I see people draw their zero coefficient up here and work with higher highs in an uptrend, but I don't think you want to do that. I think you want to use or identify your higher lows first and use that as your zero coefficient. And what I mean by the zero coefficient is when using a price channel, it's going to ask you to select two points first. That's your zero coefficient or your higher lows. And then your third pivot is going to be your higher high, or your supposed higher high, or your higher high pivot. Right? So, and that gives you a nice uptrend look. If you do it the opposite way with your coefficient, on your zero line, you could be waiting a while to find another higher high. And the object of this exercise is to find a channel quickly, something that we can work with, very fast to identify that something, a trend change might be in order. So how do we set up the zero coefficient, and what are these bounds, these outer boundaries up here? Laurentiu would call these excess, right? These are excess. These are an excess area to the 1.0 coefficient. So down here is your zero coefficient. Here's about your 50% mark. And this is your 50% area, or your point of control. It's an early point of control, but we have it at least. And we'll go over regression and how to find 50% or a point of control with a regression line later. And so what we have here is your 1.0 coefficient. Well, that's not how you spell coefficient. So there's your 1.0. So what we have above this is about 1.25. 1.25 coefficient. So here's your zero line, and this will act, at least I find this useful to act as kind of a buffer between the top of the channel and the lower part of the channel. I like to use that 25% range. So, and that's about that's negative 25 and a percent of coefficient. Okay, so here's your negative 25. Here's your zero coefficient. Here's your point of control, or your 50% from your zero. Here's your 1.0 coefficient from your zero line. And here's your 1.25 coefficient. So a lot of volatility theory gurus would call this your mean, right? Your mean or median. or your median line, right? For mean reversion. So break out of the 1.0 coefficient. Do we come back down and, well, this is the point of control, right? So now that we have this identified, we've got like a high of the range where you would be suspect to want to be a buyer in this area. But you might think about or pay some mind or put your attention around the point of control to see if this point of control is starting to act as a valuable area for buyers to get into the market. So we blazed up this way and came back down to the mean or the median line, or your point of control, and we found buyers down here. So this is kind of, I would say, confirming our pivot down here with a couple of cases by establishing a higher low here and a higher low here. So we've got an early identification of a probable uptrend and something to work with. So how do we set up this channel to do what we need? So as we said before, our zero coefficient here is in gray. Our green line represents the 1.25 coefficient. Our 0.5 is our median line, and our negative 25 is the lower end. So what we've just done is identify some areas where there may be excessive amount of trading, and in an uptrend, excessive to the downside, where potentially you might want to be a buyer. All right, so this is how I've got this simple configuration or simple setup, for identifying manual price channels. They're not always this pretty, and they don't always work this well in the beginning. But I think identifying the excessive violence by bears to push this lower and the response by bulls, this was significant. This was a significant move with this tail working here for us. So let's scroll out. I'm just going to clear the chart up here so we can get a better look. Hopefully that helps you, with at least identifying an initial setup here in a trade channel. So got our high, we got our low. Let's do this again and get a nice clean look. So we would, we don't have the rest of the data, but we've identified it nice and early. Where is this going? How could have this helped us keep in the trade for the most part? So Laurentiu would probably say, these areas are good buying opportunities, where most of a good majority of the trading in the early segment of this uptrend channel was in the higher range, up towards the 1.0 coefficient. And when we're above the 1.0 coefficient, this is acting as a good place to potentially set your profit targets and then maybe get back into the trade down here. So in this uptrend, we hold on to this point of control for some time, and then looks like bears decided to take some type of control or get aggressive in this area. But bulls are not done with this uptrend yet. This is a very good value on the lower end, the lower value scale of this channel to be a buyer. Was it a good idea? Yeah. There was nothing that really, this may have scared off some buyers with this look here, but there was nothing really excessive at the top of this move or during this move that would have suggested that the trend was changing. So good buying opportunity down at that negative 25 coefficient when we're working away from the bottom of the channel. This was a good valued area to go long, and it didn't disappoint. So now we've got an extremely aggressive move by bulls to the upside. So now our channel is telling us that not only are we up over the 50% range, or this point of control where a good majority of trading is happening and pushing away from, but that bulls are really in command of this, and we're starting to get up over the 1.25 coefficient and into this very excessive area up in here. So this is a notable area because there's so much excess going on up in here. So we're well above the higher range, the higher valued range, and this is the area where you want to potentially start to make some short plays. So let's see if we can just get a zoom in here, take a look at what's going on to see where the channel would have helped us. Sometimes it helps too to just kind of draw these things, freehand with like a paint tool, like snip and sketch on for Windows. So we see quite a bit of trading going on in this area. Very minimal, but above the 25 coefficient and then back down to the 1 coefficient. And then we're just still hanging out. Bulls are still in control of this chart above the 1.25 coefficient. But then we get really excessive here. And we move even higher. And this becomes a different high value range to work with. So we see we've got a little bit of support here on the 1.25, and then we break, and then now we're finding resistance here. So this might start piquing the interest. I mean, if you're not a seller up in here at the high end of the range, if you don't think that this is extremely excessive, and you think this is going to go higher, I mean, I wouldn't. This is danger zone for anybody who wants to be a buyer. I would not be a buyer up in here. But maybe you've got a higher high up here, and then you decide to take a short with a stop, above the high, because this is so far above the 1.25 coefficient that this is just really appetizing for bears. So then we come down to this channel again. We find rejection on the 1.25 coefficient. So that starts to pique our interest that trend might change here as well. When we break below the 1.0 coefficient, we find resistance at the 1.0, and then even more so with a loss of the point of control, and we can't get back up over the 0 coefficient. This is a clear indication that there's going to be some trend change, and bulls might have pushed too far into this, and bears are saying, hey, this, well, we're upward near 100 anyway, and bears are saying this is too good of an opportunity to not take advantage of. So right up in here, you've got to be thinking sell. And then with a consistent rejection of each of these coefficients, not being able to, just blasting through the point of control, not being able to get up over the 1.0 coefficient, and then also finding rejection and a tough time for bulls to get back up over into this channel is a clear sign that this is probably a safe entry for a short setup. So then now how can we identify that this is going to change? So what I like to do is, I do extend the lines to the right by default. I have the right extension on with the channel, but they can kind of clutter your chart up a little bit. What I do like to hold on to sometimes, though, is this extreme value high and value low trading range for future reference. So I will put these on the chart and say, here's my high value range. That's high value up in the range, and it's just, that's about the low. That's a low value, right? At least for this range. So maybe those will come into play in the future. So now we've got to identify another channel that's going to keep us either in the trade or give us opportunities to get into the trade. So let's see if we can find something. I'd really like to find some kind of violent extremes that may, show us. So would we start the channel up here? I don't think so. I think once we break this range and once we got into that lower area, this becomes your first pivot. This becomes your first actionable pivot, if you will, for your channel. So here's your first one. We were looking for a response. Pivot low, pivot high. Where is there a change in direction? It looks like right about here. So hopefully these are the two first pivots that we have, and then we can use this one as your lower half pivot. You like to find them a little sooner, but I think either one of these would work. So let's just see if we've got that at least drawn right. Yeah, it does. Well, do we got those first two pivots? So here, this is where we would start. You even start a little lower, because we're in the trade, right? We're in the trade, and this is trending lower. We want a nice channel to work with, not something that's gonna not give us a great point of control or an area that we can. So we can even come down here on this pivot. So we got this 1, 2, 3 pivot working for us, and this works a little bit better. It doesn't have to be precise. I don't think any of these things have to be extremely precise. So you would like them to be. But I think these 3 pivots work. Why do these 3 work? So then, if we've got a good identifier of a point of control, can we say that there's a good deal of trading on this point of control? Is an area of interest for us? Does it work? Is this a good trade channel to work with? And I think so. And what I like to do as well is, if I'm using these pivots and these look like good areas of valuable areas of interest, I like to mark them off. I like to mark these off, and I like to put that this is a value high range. Again, value high, and also a value low in this area. Because it looked like we kind of stalled out a little bit here, and we traded sideways for about it was almost about a week. Almost about a week of trading in this range. So to put that in perspective. Value, what am I doing? Value low. This should be value high. Right, so here's a range-bound value. That's nice. So does this work out for us? It looks like it works pretty good. So now we're working with this trading range. Let's just do this so that we can get through this chart here to see where, if our point of control is working out well for us. Is there a lot of trading going on in this area? Is there a struggle or a fight in these in these areas? And I would say so. So we're looking at the zero coefficient, which is this area here. Is this good areas? We identified an area where price action is having some difficulty, or there's a lot of trading going on, that would let us know that this is a good zero coefficient to work with. I'm sorry, a 1.0 coefficient or negative 1.0 coefficient, because this is, remember, these are our two first pivots that we're working with is our 0, and our 1 is down here. So this looks pretty good, right? Low valued area. It looked like we got into extremes, and bears might have pushed a little too far, or pushed into an area where demand was met. And this seemed to be, once we draw down into this very excessive area and then get some real positive price action moving the other way and find support on that that median line or that point of control. And then again here on the zero coefficient, this looks like the potential for a trend change. So a lot of struggle over at that negative 0.5 coefficient or 2.5 coefficient. Quite a bit of struggling, quite a bit of price action going on here, and we start to break out of this downtrend. So this helps us set up the next channel because we've got the potential for a bottom here and a break of this trading channel, and now we can identify our first two zero coefficient pivots and our higher pivot to see if this is going to help us out and keep us in this trade. So now we've switched. We've identified that if we've had a short position up in here, we need to get down here and get out of this trade. Sorry, that was a little not as far down, but we identified that the trend may be changing here, and now it's time to get out. Or maybe now it's time to switch to a long position or get ready to take a long position if this thing is going to find some continuation into this new channel. So now we're working with a new channel set, and we've got a lot of the same business happening in this trade channel price action as we did with the previous. So we've got our zero coefficient down here, a place where if buyers are interested, this looks really appetizing. We've got our point of control. Is our point of control work for us? Is there a fair amount of fighting going on along this point of control that would indicate that this is a valid point of control, and we can use this and monitor it and work with it. And if we're buyers, do we want to stay away from the 1.25 coefficient as a buyer? You do not want to be buying up in here, at least not typically. There was quite a bit of a pump up here and quite a bit of narrowing oscillation at the top, but we don't want to be buyers up in here per se, versus down at the lower coefficient, the zero coefficient, or even the negative 2.5 coefficient would be much more appealing, but we never got down there. This is very appetizing for buyers, and you would have found yourself in some buy setups down here to get yourself on the right side of the trade, and then here's your take profit locations, and then get back into the trade. So maybe you say I take a little off, put a little on. I take a little off, put a little on. We'll take some off here. Watch what's going on around this point of control. Can we get up over it? So these are distant high, value high and value low areas. I got value high, value high. We'll get that one right. So how would we have known that now? It's time to get out of this trade as from getting out of a long position and into a short position, or at least closing out our longs and taking our profits. So Laurentiu would say this oscillation, this oscillating look, when it becomes much more violent like this, is a pretty good indication that we're probably going to get some trend change, and that this looks a little bit more like distribution, right? This area looks a heck of a lot more like distribution than it does accumulation. So we are blazing up over the 1.2 coefficient, 1.225 coefficient, and then suddenly this becomes an area of interest for buyers who may have are feeling like they're late to the party. I would like an opportunity to get in on this trade somewhere. I definitely would not be a buyer up in here. Absolutely not. So So we've got this, we're working with this pivot high, and we just don't get up over it. And this starts to look like a nice bearish M pattern, if you will, that I like to pay attention to as well. Quite a run up, and then we get this M look, this topping look. You do not want to be a buyer up in here. I think the bulls were pretty brave to probably buy on this 1.25 coefficient, but I would, other than a scalp play and a long-term long position, I wouldn't with the amount of oscillation that's happening in this area. And then even more so with, break into here, break into the 1.25, and then a strong rejection on the 1.25 coefficient. And then now suddenly on the 1.0, we're finding rejection. So here's your questionable or potential for a short setup. And now finding trouble on the 0.5 or the point of control. Difficulty. A lot of trading going on at the low end of the range, but nothing working. And once we break that negative 2.5 coefficient, you're absolutely identified with this type of trading activity happening here, and then breaking the outside of the channel. We're looking like we've got a nice short scalp setup. So what we have now here too is a high of the range, and we've got a nice low of the range here as well. How could this have helped us out to identify that, hey, we've got to get out of this trade here. So like we always do, we plug in some numbers. Are we at the end of this chart? Quite possible. This is the low value of the range, and this is the high value of the range. I'll explain why I do this as well, to see if this can assist in future trading here or future levels. So this high pivot, we like to see this where there's areas of a considerable amount of trading volume to identify, and I use these two to identify future support and resistance areas. So this is another high value area within the uptrend. Hopefully I'm explaining it in a way that's digestible, but maybe more so, actually doing it on a chart is much more assistive too. So where can we, find these areas where we, might be helpful in the future? And this looks good, right? Here's that high value area, and it also looks as an area of support. And then now we've got this distant high value area that's acting as resistance. Well, doesn't that line up nicely? And I like to put my resistance in red and my my support in green, just for future stuff. So you may want to have done this prior. You would have been doing this right along with the charts. We're kind of going pretty fast through this. So isn't that interesting that when we identified a high value target up here, this suddenly is acting as resistance, and where we had resistance before in this high value area, where we had some some action. Here's the access again, right? A place where we do not want to be a buyer, but we would rather be a buyer at the lower end of this. So looking at the top of this initial impulse, swing pivot high, and now we've got this area of, there's some bears hanging out in this area. This is a notable area. And then we're trading into this range for, so Thursday to Tuesday, so a little less than, or around 5 days of trading within this area and working with this pivot. And then this lines up nicely. This high value area and this pivot are acting support now. And then we've got this one acting as resistance. So now we're in. Now we can take this channel off so it doesn't clutter us up or get in the way, because we've got a lot to work with now. Now that we've broken the low value area of this range, we can now again put another channel in here to work with. And so we get a lot of the same type of activity with our trade channel that may suggest that we could be getting another trend change working for us here. So we identified that with the last. I don't really want to do that. We identified a break here. So now we're maybe we're already in the short setup. When do we know to get out of here? Well, here's your take profit target, quite possibly. And let's just draw on this real quick so that we can get some kind of idea of where price action is. That we've got a valid point of control, a place where there's a good amount of trading happening and it's pushing away, or rejecting or finding support on, and it looks good. The point of control looks pretty good here. So we used our first two pivots right up off the top because they look pretty clean. They look pretty good, and it's inside this value area. So where one trend is starting to end, one trend's starting. We get an early identification with these three pivots working to get us into an early channel to work with. And again, we always start with our zero coefficient, depending on how we're viewing this, but always with lower highs or higher lows to start the channel out. Never do it the opposite way. So then what do we got? What do we have here? When we're outside of this 1.0 coefficient into the 1.25, does this look like really good buying opportunities well down here versus well up here? We do not want to be buyers up in here per se. Another thing that I really do like, in combination with the amount of excessiveness to price action, I really do like this W look as bullish implications. And I typically look for a break here on scalp plays, but we're in a really advantageous position here with this previous value high area acting as support, plus this bullish W. And we get a nice break back into the 1.25. We find a little bit of support there, and that would have been a nice scalp for you. Or potentially, is this trend going to start changing, albeit temporary or not? So we did see that excessiveness up here too, right? So it is excessiveness on the uptrend. This starts to oscillate and look a little bit more like distribution, and this starts to break down. And the channel can only help identify where this excessive movement is, and that where buying opportunities could be. So undeniably, this looked like a good buy opportunity. And we got a pretty decent hike here, right up against the your take profit target of the other higher valued area. So now we're oscillating in between that. So if we can get find some support in here, maybe this starts to look better, and maybe this starts to look like a trend change. And then falling back on a little bit of Larry Williams's work, where what we like to find too is higher lows, a lower low, in an established higher high, working with also with Bob Volman stuff and this nice bullish W with an anticipation of a higher low here. Could this start to break out of here? No, this is, not exactly the best of the best here on on swings, but paying mind to the point of control area and what price action is going to do with that. Can we find support up in there and start to break this, downtrend channel? So something to look out for. So this is how I set up, price action channels to help me stay apprised to what's happening and keeping me in trades here. So we got this other low value area, right, where there was a little bit of support and then a rejection. So this is another area of concern too. And it seemed to work out pretty well for this pivot higher. So it wasn't that nice. So it can only assist in identifying future support and resistance areas by identifying these patterns or these ranges. Well, they are like patterns. So here we've got resistance flipped into a support. So here's your technical test, just by identifying a little bit of range trading, a higher of a high value and a low value. So it's always nice when those work out that way, because it should come as no surprise that when there's activity like this, there's bound to be some type of reaction in future trading with it. So I did say that I would help. I would also show the usage of regression channels too, to see if that would be assistive. So we can just go through that real quick. Pardon me, quick water break. So one of the reasons why I don't use regression channels that often is because you need to find these these points of interest that may not come later. So regression channel works in the manner of, well, you've got your two, your first point and your end point, and you got something to work with. So this channel kind of helps if you've already got the endpoint, but it doesn't. So if I've only got a quarter of this data, this doesn't. It does help. So this is why I don't use regression channels that often, but you can use them. So if we identify, okay, here's our top, and then here's a nice price action pivot, and here's our second point for the regression channel with the extension. I use a 0.5 coefficient with regression channels, but I don't find them as useful as I do manual price action. So this gives you a pretty good idea that we're trending really low, but without the other coefficients to work with, you can't. This is the only point of control to work with at the moment. So let's just take off the extension to see if this can somehow help us. It really doesn't, right? Maybe this helps you in the first part of this regression channel, and then here's your rejection here. But I just don't feel like regression works to our advantage without having a clear picture. So let's do it with this. This would make more sense to do it, to use a regression channel on an area where we don't have future data. So we've got this pivot high with this regression channel, and we break it. You say, oh well, am I short now? I don't know about that, because if you looked at our manual channel that was operating, from this data set, if you're a scalp trader, maybe. Well, isn't that nice that we have this point of control area, this 0.5, as being a strong rejection area? The regression channel would have had you in an uptrend until it was broken. So are we going short now? I don't know that would be going short because of, we've got this 1.0 coefficient working here, working for us. So if I had to choose between the two, and I'm sure other people use regression channels really well. I use mine in a 0.5 coefficient, but I rarely use them. They just don't seem to be as beneficial. So let's overlay a regression channel from the same 2 points that we were working with here. Let's just say we've got the data as far down as this pivot. Not a great point of control, I would say. I mean, there's some price action going on here, but it just doesn't seem like a great point of control versus a manual channel. So I would my recommendation is to stick with a manual channel with a 1.5 coefficient and a negative 25 coefficient, and just make sure that you're lining up your downtrends with your lower high pattern on your zero coefficient and your uptrends with your higher lows on the zero coefficient. Boy, I hope this made some sense. I really do. Thanks for stopping in, and thanks for subscribing. Thanks for leaving comments. We really enjoy those. This is Paramate Trades. We've got a Discord community if you'd like to jump in there. It should be listed in the description. A lot of trade talk channels. Stop in. I post my setups there. One of our leading indicators is the commitment of traders, so we post that every Friday. So please take a look at the video and let us know what you think. Thanks for stopping in. Hope this was informative and possibly helpful at getting you beginner traders set up with some price channels. So until the next video, hope you find yourself on the profitable side of the trade. Thank you.